Gary, we're moving to the Japanese carry trade. We spoke about this a couple months ago. You started talking about this in October of 22, I think was the first time, might have even been sooner than that. Gary, we're talking about a little bit calmer this time. Thing number two, Japanese yen carry trade unwind 2.0.
Thanks, Rob. So, a lot of people last year in 2024 discovered the Japanese carry trade. At Deep Knowledge Investing, we did start talking and writing about this in October of 22. I think it was in November. I did a lengthy program with Mark Rosano of C6 Capital at the New York Alternative Investment Roundtable talking about this. But I think the first interview on it, I want to thank Michael Guyot of the Lead Lag Report. We got on record in October of 22 talking about this. So basically, the Bank of Japan kept their bond yields around zero and even below zero for an extended period of time. We're talking about, a couple of decades here. And so with the rate on Japanese bonds so low and the US Federal Reserve offering higher rates and the US bond markets offering higher rates, we had what was called a carry trade, where a lot of hedge funds and investors were shorting, they were selling Japanese government bonds, effectively shorting the yen, and they were buying US Treasuries, effectively going long the dollar. And by doing that and leveraging up, they were guaranteeing themselves it basically was the return they got was the leverage return on the difference in the rate between US Treasuries and Japanese government bonds, which again were right around zero. Now, the risk in that was, what if the dollar weakened and the yen strengthened? But as the US Federal Reserve raised interest rates and the Bank of Japan kind of stuck with where they were, that didn't happen and people were getting great returns. Now, a couple of years ago, the Bank of Japan went from negative to positive 0.1% and then positive 0.25%. This is, when the US Federal Reserve was right around 5%. And so there was a little bit of an unwind and people got a little bit nervous, but, because the Bank of Japan did so little to defend their own currency, you didn't really see a big unwind at the time. Japanese government bond yields for further out on the curve didn't move that much. And the dollar remained strong. And so, what you saw was a couple of years ago, the yen was something like 102 to the dollar and expanded it out to, 161, 162. That's pretty bad if you're Japan. And then, lately it's been pretty solidly in the mid 150 range, which again is not great if you're Japan. So we had a little bit of an unwind a couple years ago, but that's the history of this.
Gary, you said there were renewed fears, right, that this would create another multi-trillion-dollar unwind. Why did that not happen?
Well, so Rob, what happened was last week, what I did before is I gave you kind of the multi-decade history and where we started talking about it. Last week, the Bank of Japan raised its reference rate. That's their version of the Fed funds rate from 0.25% to 0.5%. It's their highest level in 17 years. Now, let's just take a step back. While the rate technically doubled and it was the highest rate in 17 years, it still was only a 25 basis point or quarter of a percentage point increase. And they're still stuck around, 0.5%, where the US Federal Reserve is offering an overnight rate of roughly 9 times that level. So, they raised the rate, but not by very much. So the concern was that as the Bank of Japan raised this rate, oh no, what if we have this multi-trillion-dollar unwind this time? What if we reverse the carry trade this time? And that didn't happen for two reasons. First, in this case, the Bank of Japan telegraphed the move in advance. No one was surprised. Investors had time to process the implications. And what they realized was, okay, wait a minute. Yeah, they're doubling the rate, but at 0.5%, there's really no need to unwind the carry trade. We're still getting really good returns on being short the yen and long the dollar, and there's nothing here that's going to cause the yen to head back towards 100 to the dollar or even anything in that direction. The second thing, as we all know, last week's DeepSeek announcement sucked all the air out of the news cycle. Everybody was focused on that. That announcement temporarily rocked the enormous U.S. technology sector, and it ensured that very few people were paying attention to events in Japan. Investors tend to be pretty good at processing lots of things at once, but this was a situation where the DeepSeek announcement was literally just moving trillions of dollars of market cap overnight, and that's where people were focused.
Yeah, we're going to get to that a little bit more here in a minute. You're watching this week's issue of the Five Things, the President Trump is Doing Things issue. Be sure to head to deepknowledgeinvesting.com, sign up for a free subscription. We'll get you added to our newsletter. You'll be notified of content that's posted online, as well as the version of the Five Things. If you consider a premium subscription, you'll get access to all current recommendations, exclusive premium subscriber events, webinars, material, and obviously knowing when Gary is opening and, more importantly, closing positions. Head over to deepknowledgeinvesting.com and check that out.